Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you all. Hope you guys got great upcoming plans. It's February 21st today. We got one economic news release today, and it's a kind of a impact one, and it's the existing home sales for the month of January. So back in December, we had 4.87 million existing home sales on the books. It was supposed to pull back a little bit for the month of January, and it did. It pulled back a little bit further to 4.625 versus the 4.65 forecast. Now, a lot of this is being attributed to the severe weather we have back east, but not only that, if you think about it, or at least those of us in the real estate industry, were based on a huge slowdown. Like here in California, it wasn't obviously the weather, but it was more related to people are just taking the time off, enjoying the holidays, relaxing. And as soon as the holidays were over, boom, we're back to business as normal. So I think you'll see these numbers improve once we have February come around, because people were back to hitting the grind, going to escrows, closing. You'll have some that will go up in the month of February. So next numbers, I think you'll see some improvement in those. Now nationwide, I can't really say. We may have some setbacks in other areas because again, we are having some severe weather. That's been probably hurting a lot of areas. Hopefully that will be resolved soon as we head into the spring, end of summer, or end of winter and spring. But let's jump over to the headline news here today. And right now the stock market's up, even though that's not great news that we had existing. So essentially this week the stock market is going to go up as a whole. The reason, even though we had some data that should be dragging the stock market down, but they're looking at long-term aspect, thinking that this is just a blip in the radar due to the extreme weathers we had back east, and so they're kind of chalking off, because they did see some other positives in there, like the leading economic indicators to the PMI. Those were good numbers that we saw that were reported yesterday. So they're kind of looking at those and kind of shrugging off, like the Philly Fed, the Empire State Index, that manufacturing, and looking at other numbers and kind of putting a little bit more weight to those. So we'll take a look at the bond market and see what interest rates are doing. So as a result, with the stock market going upwards, it's pulling money from the bond market, which is which is reducing the bond values, and now we're down to increasing the interest rates. But today we did start off lower. We did rebound, so we're up about 18 basis points. We did start off lower than where we left off yesterday, but we're up from so far this morning from where we left off at 104.09 versus the close yesterday at 104.00. So we're up about 9 basis points from yesterday. It's not a if you're on the East Coast, your pricing would have been worse, but you would have seen an improvement so far later this morning with the improvement. But for those of us on the West Coast, our pricing would have remained the same and not have any change. It's not big enough from where we left off yesterday to create a price change from yesterday's pricing. Now we are, if you look at the chart here, we are on a downward trend here. Our next really a big gap that could really we could potentially see is a 103.80ish range. This would kind of create a correction in the bond market, approximately about from our high about back in January to where our lowest point, and it'll be about almost a 50% reduction, about around the 103.60ish to 103.80ish range. So we could see us drop to that point before we can make any corrections upwards, depending on where the economy goes and where the investors go. But we could see that before we see more improvement later on. All right, folks. So today, so far this morning, pricing is the same as where we left off yesterday, but be very cautious if you're buying or if you're in escrow or if you have a loan in process. I would certainly lock in now, take into the gains that are there, because short term we could see a little bit more volatility where we could have rates creep up a little bit more. All right, folks, thanks again for watching. Have a great day. And next week, we do have a full week of economic news data. Monday will be the lone exception where there's no economic data scheduled. But Tuesday on, we got a lot of housing news that'll be coming out next week. So a high impact news week. All right, folks, thanks again. Again, enjoy your weekend, and we'll see you guys next week.